There certainly has been a big roller coaster ride with the market lately. So the question is, have we put a bottom in yet? Or is this just a nasty bear trap? Let's dig in. My name is Brian Cannon and welcome to Markets in 5. So we're going to jump into a couple of charts today. This is the S&P 500. So you can see that we were definitely oversold, and I was ready for a bounce. We were due for a bounce, but certainly had a couple of really nasty down days in a row. Yesterday, Trump put a pause on some of the tariffs and reduced them as well. So certainly gave a sigh of relief to the market, which certainly rallied up and recovered some of those real nasty pull downs. So, are we done? Is the bottom in, or is this just going to be a bear trap that heads lower? The simple answer is we don't know yet, but we're certainly watching. But the good news is we had this pretty heavy level of support down here, this red dotted line. It came down and breached it initially, popped back above it, and then has cleared a couple of other levels and certainly filled this gap. RSI is negative, still below 50, and so it still has to kind of prove itself and get back above that 50 line. MACD has got to cross over and head back up for us to feel comfortable that this is a real recovery. And then of course we got to get through this downtrending line. So if we take that same chart and we zoom in a little bit, you can see a little bit closer that again we got to get above this downtrending line. So in other words, when we have lower highs and lower lows, we need to break that cycle and we need to break back above it. There's also this black kind of line that's had a couple of levels of support here. So we need to get above this black line and we need to get above this green line to really feel comfortable that we are truly in a recovery mode. Again, we did come down and hold this red line down here, which is great. We intraday broke it, but then popped back up. So, so hopefully that is the bottom. Time will tell. I think that we might gyrate through here a little bit. But again, if we can break above this green line, then certainly that would be a clear indicator that that the damage is behind us. This is an interesting chart I put together. So when we look at the S&P 500 on a weekly basis, it takes some of the day-to-day kind of movements out. But what's interesting is, you really want that S&P above that 40-week average to feel comfortable that we're trending the right direction. Currently, we are still below it. But if we look back, over the last couple of years when we've broken it, there was a trade war with China and the Brexit, and so it broke below the 40-week average and it dropped down a little more than 15%. From that 40-week average and then recovered, and it took about 2 months to recovery from the trade war with China during the first President Trump term, and then we had the COVID lockdowns, which of course put the market about a little more than 20% below that 40-week average, and it took about 2 months to recover. And then, when we had the inflation, interest rate hikes, and the Russian war, that one took about a year to recover, and it was down about 21% below the 40-week moving average before it recovered. And so here we are, we're about 15% below the 40-week average. Now we made a lot of that up yesterday, so hopefully, if that's the bottom, then then we can recover from here in a fairly short period of time. So historically speaking, unless there's something really, really bad going on that we need to really worry about, more than likely this is just going to be in the rearview mirror before too long, and be really a good buying opportunity. So we're watching. One chart that still is on my mind that we're watching is this 100-year look back at the U.S. Stock market. So you can see that the economy, the stock market definitely cycles over time, and we've been in a nice bull run for about 12 years so far. So we've got potentially a little bit more time on the upside. As long as we hold higher highs and higher lows, we'll be in good shape. But we do have this round of inflation that we're dealing with. And if you look back historically speaking, inflation typically only occurs during secular bear markets. So that is something that could be certainly a canary in the coal, in the coal mine. I don't believe that we're in a new paradigm shift, and that history doesn't matter. So I do think that this inflation is a problem for us. But is it a problem for us now, or is it a problem for us in 5 years? I don't know. But we are watching, and as long as we hold higher highs and higher lows and keep this bull trend going, then we need to stay strong and buy the dips. But when that reverses, then we certainly need to be more protective in our portfolios. So in wrapping up, certainly it's been a sigh of relief, this quick recovery. But we've got a few other levels to kind of confirm that it truly is a breakout. So we'll see. We'll be watching. If it breaks down, then we'll know it was a bear trap. If it breaks out, then we'll know we put a bottom in. So time will tell, and we'll keep monitoring the situation. If you have any questions, give me a shout, and I'll see you on the next Markets in 5.